Let's go now to our friend Bimnet Abibi from Galaxy Trading. As always, Bimnet, thanks for coming on Galaxy Brains.
Thanks for having me.
What a week. I mean, we're seeing material movement in Bitcoin. You can see over my shoulder, right now as we record on Wednesday, it's $34,700-ish is the...
Closer to 800, but who's counting?
Yeah, I mean, it's... and we had a material, huge move earlier in the week.
Absolutely.
What do you make of this apparent renewed optimism?
I think it's entirely warranted heading into a catalyst that is highly probable. It was driven by a number of things, but one of the main things was a short squeeze, particularly in the option side of things. The street was generally positioned pretty short gamma into this break. In addition, you had a ton of folks shorting Bitcoin at the yearly highs, and a ton of OI ended up getting wiped out on the perps. And folks, saw the technical break, right? 32K was, year-to-date highs. We broke through it pretty easily. The 200-day moving average that was previously resistance held as support, and now we're, once you were above 32K, you're above every relevant moving average and technical average you could think of, and so you had a technical breakthrough, a short gamma squeeze, a short positioning squeeze as well. On top of that, the folks that got absolutely blasted, and all of those factors, coming together, and now the question is, can we continue? And my opinion is an unequivocal yes. I think very few folks, anecdotally, have caught this move, especially in the traditional community. It's a rally that is under-owned, under-positioned, and so I think every 100 points higher is a lot more painful than every 100 points lower.
Yeah. This is a 20% move from the range we were in just last week.
But when you have Larry Fink coming on television and telling you he thinks about it as a safe haven.
Right. A flight to quality.
A flight to quality. Yeah. Like, the world has changed. The beauty about an institution like BlackRock or these TradFi institutions is that they institutionalize an asset.
By definition.
By definition. Yeah. They give it credence. And so it's not that Bitcoin wasn't institutional before, but when Larry Fink, puts the BlackRock stamp on it, it's different. Yeah. And it is different this time. And so what have we known always to be true? The liquidity available versus the
potential demand.
But the potential demand, there's a huge imbalance.
Yeah.
And I think we're just getting a taste of that. And this could be, again, another Minsky moment for markets. And where all of a sudden people realize, oh, wait, we have this new asset. It has a role in investment portfolios, and we can't ignore it now because every other institution's looking at it.
Right.
And then here's the beauty about this is that it becomes so self-fulfilling. There's such a positive feedback loop to positive price action at the moment, right? Every percent higher, it becomes, one of the better asset classes performance this year. It gets better on a risk-adjusted basis. The story, the thesis gets more credence.
Yeah.
And so you have this convexity of opinion that isn't, price-based, but it's thought-based.
Right.
And so that's where you are in the market, and that's what these technical breaks are telling you, that when you're above a 200-week moving average or day moving average, it tells you there's a change in the trend.
Yep.
And we know why.
Right.
And so how do you trade things? You buy things going into a known catalyst.
Yep. Yeah.
And that is what TradFi is, I believe, going to do.
Yeah, and we've seen continued strength. It wasn't just the gamma squeeze or the technicals either, right? To your point, it's this catalyst that people are really waking up to. Even, we had a pullback after Monday's incredible rally. A minor one, and we're already back right where we were. Right?
Absolutely.
And it wasn't a big, I think I saw it go as low as 33 at some point on Tuesday. Still obviously way above where it was.
Yeah, after it broke 32, the low was like 32.7.
Yeah, like you can exactly, like you can see, and if you just watch, it's just marching up. So there's clearly a lot of demand out there. To your point on returns, I think at this level, Bitcoin's up 110% this year
have
total
to adjust
return.
The math every moment.
I know, it's just keep going up. It is basically the best performing asset of the year. I'm not going to mention that. I did find two equities in the U.S., which we won't talk about, but that are slightly better. But it's I mean, those are individual companies. This is a giant global asset.
Yeah.
Now, we should say, I guess, like in your mind, what could harm, even leading into ETF approval over the next couple months? What could like make us bearish on Bitcoin, or what could impact it negatively in your mind?
Well, I think a broader risk-off move in markets.
Yeah.
If 10s start taking out 5% and the curve starts steepening like crazy again, I think you'll see a continuation of the risk-off move that you've seen in the Nasdaq and the S&P. And everybody being like, oh, inflation's still a huge issue. QT is leading to bonds that have no bid and stuff. So you could go down that spiral of thinking,
right?
For sure. In addition, you could have like things like gold trade down because all of a sudden there's peace in Israel, or
right.
a ceasefire, or that situation,
or even the reverse. Like even if I was going to say, if we have increased geopolitical conflict and the world doesn't yet treat Bitcoin as a flight to quality, right.
Right now it's got a weird hybrid, but ultimately, like everybody is thinking that there is going to be a God candle when an ETF is approved.
Right. So it's about positioning ahead of that.
Yeah. And so folks are trying to pick their levels, buy dips, but basically, you might have only between now and the ETF approval might be your last chance
within a month and a half or
get,
so, right?
To get
possible.
it before that said candle, potentially.
Potentially, right? I agree. And we put out a report. Charles Yu on my team put out a report yesterday on Tuesday, estimating really, I think, a very defensible and conservative estimate on the potential inflows to generic Bitcoin ETFs, and its impact on price. And I mean, I think. We think it could be big. I mean, go check out the reports on our website, but without getting into it. So I think there is plenty of reason to believe, I believe, that there will be significant interest in the ETF. I think some people, it's interesting, the responses to that report were either you're overestimating or underestimating, right? Like people either think like, well, why would you buy it? Like you could already buy it on Coinbase or wherever else, right? Like why would you need the ETF? Or there's these other products already in the market. And it's like, well, the channel that has $47 trillion doesn't have access to those products, right? And so that's why we think it could be big. On the other hand, people are like, oh, it's too small. I think we said 15 billion in inflows in year one and 38 in year three. And people are like, it's going to be up 100 billion, right? And there's really no way to know. We're just triangulating. But in any case, we see significant interest, I think, in demand. And obviously the market's anticipating it.
Yeah. No, I the long run, how much inflows it gets or not, it's going to be tough to ballpark. But again, we go back to the main points. We know that the American capital market's the best capital market ever in history. ETFs the best product ever to
trade on them.
To trade. And so like I'm convinced that we have the recipe for, a pretty aggressive price movement. Whether it's short term or long term, I think it's it doesn't matter. But for the big picture, like is it too early to declare victory? Probably. I want to do like a George Bush 04, like in front of
mission accomplished.
Mission accomplished moment, but without getting the approval. But if you do get it, it's just monumental.
I want to point out, I think you literally raised the bit signal.
I did
on this podcast 2 weeks ago.
Yeah. I mean,
you said I'm saying it here. I'm raising the bit signal.
Yeah, I just got to.
You got the Spidey sense.
I had the Spidey sense on the Bitcoin, but it's also just the general level of frustration with central bankers and monetary policy. You consistently see these central bankers being asked about the fiscal situation.
They refuse to speak on it, right?
They speak on it in a way that avoids the main question. They're like, well, our job is to respond to fiscal policy, right? Is what they say. And because that's not their mandate.
Right.
But ultimately, like we're in a situation where we run $1.7 trillion in deficit. We have congressional leaders that are they actually
can't form a government at the moment.
They can't.
Effectively.
And like you're paying a level of interest that's right now like just insane. It's similar to like spending on defense, like 15% of the budget on interest, and it's only compounding over time.
Right.
This country is addicted to spending money it doesn't have.
Yeah.
And there's no politicians that are like, well, there are a few, but it doesn't look like a situation that's going to be addressed politically, and therefore the central bankers need to properly talk about that and address that and that reality, but they choose not to. And in the face of just mounting and surging treasury supply, And like they're not even buying it. And so it's like, do you acknowledge that you got to buy all this paper and do MMT forever and yield curve control? No, because that tells people that you have no control over the fiscal, and like that should in theory debase your currency.
Even Jamie Dimon, I think yesterday had a big quote about this, about how if you look at the recent history of the Fed, you should really not trust what they're saying about the future.
No, absolutely not.
Because they did such a bad
job. Their forecasting is so bad. I mean,
it's
just been so politically unacceptable to like criticize the Fed, but Jamie Dimon can do it now because one, like, you know, he's the biggest bank and he saved them on whatever that bank that they bought was, but they need him now because all of the regional banks are in shit. And like the only reason that we didn't have a huge banking crisis is because we spun up some random facility to give banks loans,
which was effectively
really
fake money, right? I mean, or free money.
It's just expanding your balance sheet.
Yeah.
It was literally like doing more QE.
Yeah.
From a technical perspective.
just for banks when they need help.
At these great terms where you can borrow at par on, something that's worth 50 cents.
That's effectively marked down. Yeah.
Right? And so, it's just like every solution that we have to monetary policy and market incidents is print more money, lend more money, lend more dollars in swap lines. I will give you financing versus this. And so if the entire premise of our monetary system is built on the ability to print more money, that's not a foundation that makes me feel comfortable. And it becomes ever present, like when central bankers keep getting asked about it and they can't acknowledge the simple facts of like their monetary policy is going to be entirely driven by fiscal and fiscal dominance. And so anyway, I could rant on this.
That is our man, Bimnet Abibi. I love it. I love the rant. Bimnet Abibi from Galaxy Trading. Thank you so much, as always.
Pleasure.